Ladies and gentlemen, welcome back to the channel. This is your one-stop shop for everything you need to know on AMC stock for this week. And this week could be a big one for many different reasons that we'll get into here in this video. So hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. I want to hear your guys' opinions. Are you bullish? Are you bearish for this week, especially given the information we're going to cover here in this video? So the first thing I want to say off the bat, there's going to be a lot of economic data this week. There's going to be a lot of different things happening in the markets. One of the biggest single events, I think, for AMC stock could be the official short interest report. That should be coming out on Tuesday. So on Tuesday is going to be September, well, actually it might be, let me see. Yeah, Tuesday, September 12th. That's typically when you get the official short interest report, if the 9th falls on a weekend, and the 9th of September fell on a weekend today. So, well, that was yesterday. So you didn't get the exchange reported short interest number coming out. So that will likely happen on Tuesday. It's possible for whatever reason it comes out on Monday, but most likely on Tuesday. And why I think this is an event in and of itself, even though it's just a data read, is because the expectations kind of that Ortex has right now is short interest around 11%. There's no way in hell, okay? So the official short interest report, we've talked about this many times. If you have not heard or you don't know, AMC's price was about $33 on August 15th. And that was when short interest was 29.25%. So odds are today, given the stock is at $7, the short interest has really exploded since August 15th. And it could be a lot higher than Ortex's estimates of 11%. So I think that'll put AMC as a short squeeze trade on a lot of people's radars. And if you have not seen the last video we put out, I highly recommend you guys give it a listen. But AMC stock is basically in deep effing value, okay? That's where AMC is at right now. It's not an expensive stock by any means. It has a PE ratio of 2, potentially, right? If you know, things continue to play out the way we expect. So you don't have good things baked in. AMC sales for Q3 are expected to be more than the whole market cap of the company. That's a price to sales ratio of 1/4. A 1 for price to sales ratio is pretty cheap. So you are like very, very cheap right now. And that's why the average analyst price target is around $21.68 per share. That would be a return potential today of 202%. So I don't think it's some crazy stretch of the imagination to sit here and say AMC stock could bounce quite a bit. Eric Wold and B. Riley Securities still thinks AMC could hit $45 for its price target. That would be $4.50 on the split adjusted pricing. We're talking about some very big upside at these prices. So keep that in mind. As long as AMC does not go bankrupt, in which they now should have about $1 billion of capital on hand of liquid cashola, yeah, bankruptcy is off the table. Okay, just either way you put it. Right now, whether we get more dilution, it's just off the table. Okay. And I don't expect any more dilution as of right now. AMC has already nuked its share price. I doubt that's what happens again. The next time you get dilution, AMC stock would be, in my opinion, a lot higher than where it is today. So I think for these reasons, that's enough for most people to be actively and constructively bullish on AMC stock. Now, this upcoming week is quad witching. So technically, it's triple witching now since single stock futures stopped trading in the U.S. in 2020. But it's the expiration of stock index futures, stock index options, and stock options. And these quad witchings are the third Friday of March, June, September, and December. So this Friday is a quad witching day. Quad witching days don't tend to be any more bullish or bearish than any other day, but in September, it can be. So Carson Research puts it pretty well right here. It says, why is September so weak? You ask. The two ideas that make the most sense to me is, first, the big boys are back from the Hamptons and begin to sell to square up their books. Secondly, many large hedge funds and institutions end their fiscal years in October, and you tend to see some selling ahead of year end. And that's kind of a good way to put it. If your fiscal year ends in October, well, the end of September, you can see quite a bit of selling. And that's why, as you can see from this chart, the first half of September tends to be pretty good until you get past quad witching. All hell tends to break loose after quad witching. Towards the end of the month is where you tend to get a lot of the declines. So seasonality, is just not great as far as after the quad witching. So that could cause some downside in our markets. You're also going to have a lot of economic data as well that you really can't leave out of this. Now, it's uncertain whether this is going to give you a, bullish AMC or bearish AMC. I don't know. But for Monday and Tuesday, you're not going to have much. You're going to have some data coming out from European countries, as well as even some smaller data points from China. But on Wednesday, you're going to get the core inflation rate month over month. That is expected at 0.2%. Last month's reading was also 0.2%. Inflation rate month over month for your headline is expected at 0.6%. Last month's reading was 0.2%. So you're expecting a acceleration for your month over month headline, as well as your core inflation rate year over year. That's actually expected to fall from 4.7% to 4.3%. And your inflation rate year over year on the headline is expected to rise from 3.2% and head to 3.6%. So your headline is expected to increase across the board month over month and year over year, and your core is actually expected to stay the same month over month and actually decline year over year. I think it's one of those situations where Monday and Tuesday could be bearish as investors are bracing for this really bad CPI report. And then I think on Wednesday, when we get the CPI report, markets might actually bounce because it might be a lot better than feared. And don't be surprised if that happens. Now, retail sales month over month for the month of August are going to be coming out on Thursday. You're expecting 0.2%. Last month's reading was 0.7%. Now, this is actually the most important thing, I personally think, for the markets right now. Is as long as your core month over month and core year over year inflation do not ramp up unexpectedly, then retail sales is going to be the biggest thing. Now, you're expecting a sharp decline, like I said, from 0.7% last month to 0.2%. Why this is important is because the Atlanta Fed GDP Now tracker basically gets its estimates from retail sales data and from consumer spending data. So you're expecting really good GDP numbers for Q3. The average analyst estimate around 2.4%. 1 month ago, the average analyst estimate was less than 1%. So you've quite dramatically increased expectations for GDP, right? If that does not happen and you do get a bad GDP report or bad retail sales numbers, that's going to lead to lower expectations for GDP, and that I don't think is priced into the markets. For an example, if you start getting really bad data here and the markets are expecting the Atlanta Fed GDP 5.5% GDP, markets expecting 2.4% GDP, but what if we start to get some data that says, hey, maybe GDP might be really low, if not even negative potentially? That could be something that could cause a lot of downside to our markets, and something I will keep in mind throughout the rest of this week. There's that. So on Thursday as well, you're going to get PPI month over month. That's expected at 0.4%. Last month's reading was 0.3%. So that would be an acceleration month over month as well. You are also going to get initial jobless claims, expecting 226,000. Last week's number was 216,000. So that is not too bad, at least what the expectations are. And then on Friday, you are going to be getting the Michigan Consumer Sentiment Survey. You're basically expecting things to be pretty good with the Michigan Consumer Sentiment Survey. The thing that could really affect GDP expectations, at least a little bit, is your consumer expectations. So if consumer expectations start to fall, that's not obviously going to be great. We've seen consumer expectations go higher as of recently, but let me tell you right now, this Michigan Consumer Sentiment Survey really revolves around what the markets do. So you could see the sentiment in October and November of 2022 when the markets were at lows was not great. Today it's a lot better. Stocks have rallied. So I don't think that is as nearly as important as these other data points. CPI on Wednesday, as well as retail sales on Thursday, and PPI to a lesser extent. Those are the important data points for this week. Now, again, I have no idea how this is going to affect AMC. What we've seen before the judge made her final ruling was when the markets were down, AMC stock was up quite a bit. Now, if we get kind of a weak market after it looks like the short interest is 40 or 50% after we get the official short interest report, which again should be on Tuesday, and then you start to get some weakness maybe on Wednesday or even on Thursday, that could start to have that opposite effect where when stocks fall on the broader market basis, AMC stock might start to outperform. That is certainly a possibility. And I do believe on Tuesday we should be getting some of this option data that starts to update as well. So hopefully we can start bringing that to your attention as well every single day. And then you're also going to get cost to borrow fees that probably increase quite a bit. Today it says Interactive Brokers cost to borrow fees at 4.24%, cost to borrow max at 14.39%, cost to borrow average at 6.5%, and cost to borrow minimum at 2.32%. So very low cost to borrow fees right now. I don't know if that's accurate or not. It might be, it might not be, but I do think that will change once the short interest is actually accurate. And with all of that being said, guys, you've even sold off 37% on September 6th. On September 7th, you sold off almost 6%. And on Friday, September 8th, you sold off 11.5%. I don't think it's a crazy assumption to think that we're due for a big bounce soon. So don't be surprised when that happens. I do think there's a lot of potential, especially with some of the options right now. But I think the safest bet is obviously just buying the shares. But I do think the options have a really good risk to return right now, especially if you were to get a big bounce or even, a couple 100% bounce would certainly be possible here. Now, if you look at the MACD is at negative 7.15. So it's pretty negative, but it's starting to curl up. It's starting to look a little bit better as of right now. It's starting to actually bottom out a little bit. And that could be a sign of maybe a reversal, maybe some upside to come from here. And if you look at the RSI itself, you are at 23.46. You're starting to kind of bottom out. You're not going any lower on the RSI, so that is good. But you're not really going higher as of right now. I think just the sellers are getting exhausted at this point. And again, I think when the short interest comes out that it's 40, 50, 60, 70, 80, 90, even over 100% short on AMC stock, that's a big problem for the hedge funds, institutions, and anyone that is short in AMC. That's not a great scenario to be in, especially considering AMC is cheaper today, in a much better fundamental position today than it was in January of 2021, yet the stock is cheaper than January of 2021. So, I mean, that's kind of just putting that in relevant terms. I mean, if you could have went back and bought AMC stock in January 2021, I think every one of you would have, and now you have the chance to do so right now. So I think there's a lot of opportunity here, guys. So that is it. Hit the like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with us, you want to come hedge out your portfolios, you want to come make some long bets, some YOLOs, we're there for all of it. Or just come join the conversation over there. Link down below in the description of this video. Just a final thought here as well for those of you guys that did watch the whole video. As far as kind of what I think could happen with AMC stock this week, I do think a potential bounce even to that, $15 level is certainly on the table here. I think that's where the selling just got really overblown. around 15. Like, should the stock really be under $15 right now? No, I don't even think the stock should be under, 20 right now. But that's where we are, and I do think that does set us up for a big bounce. On the low end, AMC stock could fall to $5 per share. I think that is egregiously low, and I think that would be a huge opportunity, an even bigger opportunity if that were to happen, even compared to where AMC is at right now of $7 per share. So there's not too much downside left to statistically be had in AMC stock, guys. So that is going to do it for this video. Thank you for watching. Enjoy the rest of your day, and I will see you in the next one.